In the last few chapters, there aren't any calculations. It's purely theory. It's looking at like the structure of the company. It's looking at what types of risks you get. It's looking at managing those risks and so on. So when looking at study unit 23, 23 is the focus now. Components and role players of an adequate risk management program. So that's what we're looking at here. We're looking at the components. So what does it entail? And then we're looking at who is actually responsible for making sure that there's a program in place. So let's start off by defining what risk is again, just to recap that from last week. What is risk?
Excuse me, sir. We said that risk is it's not knowing what the end outcome might be, so a type of uncertainty.
So what is the risk management then going to deal with?
Well, the risk management should be how to, I suppose, not just manage the risk, but better turn that risk into reward of some sort.
Okay, well, remember, you can't really turn a risk into a reward because, remember, risks are risks. Risks are not knowing if there's going to be a reward or not, if that makes sense.
Yes.
Okay, so you can't change a risk into a reward. Okay, remember, the risk is something that's uncertain. So if we do something, that doing is either going to lead to something positive, which is a reward, or that doing is going to lead to something negative, which is bad, obviously. Okay, so we don't know what's going to happen. So we're looking at risk management because, do you agree, things are uncertain, right?
Yes, sir.
Okay, there's uncertainty. So decision making must be made or must be conducted with an understanding of what the consequences could be. Right, so when we make decisions, we're not just making decisions because we're making decisions. We're making decisions because we understand what the negatives and positives are. And we're obviously hoping for positives to arise rather than negatives. Do you agree?
Yes.
Yeah? Do you agree?
Yes, sir.
You do?
Can you hear me?
No, I couldn't hear you there.
Yes, sir. Can you hear me?
Yeah, I can hear you now.
Yes.
Right, so when looking at risk management, it's more a process of checking that things are going to occur. Or not occur, but having an expectation of what's going to occur. That's more what you're looking at here.
Alright.
Okay,
Yes, sir.
so when looking at risk management, there's going to be components and role players. Role players are the people that deal with risk. Okay, last week we spoke about who should be responsible for it. So are we all responsible for risk management, or do we give that responsibility to one or two individuals?
Everyone in the organization is responsible.
Correct. Everybody is responsible for it. Because remember, at all levels of the organization, there are going to be risks. There's going to be risks at the top, in the middle, and at the bottom. Okay, obviously the risks differ. So the risks that the directors would be dealing with would be different than the risks that, let's say, the employees would be dealing with. Does it make sense?
Yes, sir.
Okay, so even in the study unit, you'll see they break it up into those different sections. They first talk about the components, then they talk about the approaches. Okay, so how do we actually approach risk management if we know who's responsible for it and we know what the components are? Okay, the components would be, well, what is required in order to manage risk? Okay, we're looking at this, the risk management. How do we implement good risk management? Right, so the introduction talked about King 3 again. Okay, we spoke about King 3 last week. We know it's a way to prevent risks from occurring, okay, or it's a way to have good safeguards in place. Okay, obviously businesses want to prevent things from happening rather than dealing with things that have happened. Okay, so prevention is better than cure. Right, you'd rather prevent risk from arising, or you'd rather prevent negative things from arising before they actually arise than having to deal with the problems that come about from not having the right, let's say, processes or systems in place. Okay, so when looking at risk management, there are a lot of different areas that you can monitor and you can, let's say, control or try control. And there's obviously frameworks that give you information about how to do that. So the first bit is obviously the components. Components mean things that make up risk management. So this is like what do we need? What are the ingredients? Okay, so if we're trying to create a good, let's say, risk management department, or we're trying to create a good risk management culture. Okay, remember, it's more a culture than a department. Yes, you can have someone that's responsible for identifying risks and managing risk, but remember, it's company-wide. So if I'm focusing on the risk management program, I need to know, well, what is going to make up that program? And we need guidelines in relation to that. Okay, we need to know, well, what makes up a good program? Okay, what makes up good risk management? So with risk management, it's necessary to achieve the organization's risk management objectives. Right, if your objective is to, let's say you're manufacturing products and there's a lot of wastage. Okay, would wastage be a risk?
Yes, sir.
Yes, of course it would. Okay, because why? It's something negative that arises from an event. Right, so if I'm manufacturing and I'm wasting a lot of the resources that go into the manufacturing process, I'm obviously doing something wrong. So risk management would be trying to use more effective ways of manufacturing goods in order to reduce the amount of wastage. Right, because no one wants to waste resources, and that could be an objective. So the objective could be to eliminate wastage as much as possible. Okay, an objective could be maybe acting ethically. Okay, an objective could be maybe keeping the employees happy. An objective could be maybe keeping the clients happy, right, or satisfying their needs, or producing quality products. It could be a whole host of different factors, okay, in terms of what you're trying to achieve. Okay, so the risk management could be, well, we're not going to have bad quality products. We're going to have quality products. So obviously the risk management would be, well, in the production process, if we're not producing the products correctly, there could be a risk of malfunctioning products or products that don't meet the requirements. Do you agree?
Yes, sir.
Okay, so if I'm looking at the actual objective, if the objective is quality, well, then we need certain components, or we need certain systems in place that give us good quality products to reduce the risk of bad quality products. Does that make sense?
Yes.
Okay,
yes,
that's why we have things like quality control, to ensure that products are of a certain standard. But I like this diagram here because it looks at the framework. What does it start with? It starts with the objective. Okay, do we need to know what we need to achieve?
Yes, so we do.
Of course we do. Okay, so you'll see the first bit here at the top is looking at the objective. Okay, we need to set an objective. Okay, objectives are almost like the goals. Okay, what are we trying to achieve?
Yes,
obviously,
sir.
if we know what the goal is, then we know how to, let's say, carry it out. Right, so there's different pillars here. You've got strategic, you've got operations, you've got reporting, and you've got compliance. Right, each of these pillars make up this framework for managing risk. Okay, so let's say the objective. Let's talk about photography again, because you're in that industry. So if the objective is to produce the highest quality photos for our clients, okay, that's the objective. So the objective is photos of the highest quality. Right, then we've got different pillars that will contribute towards that in terms of achieving that objective. So what strategic things would we have to do to generate the highest quality photos?
I think excuse me. I think my strategy would probably be taking pictures. If I'm trying to achieve the best qualities, take pictures in places with sufficient, I suppose, light almost. So every time I'd want to take pictures in a place with enough enough light that the person's face or the picture comes out even more.
Okay, that's possible, but I wouldn't say that's strategy. I would say that's more operations, because that's the doing. So
Okay.
if you're going to be taking the photo, then you're going to want to take the photos in the area with the most lighting. Do you agree? For me,
Yes, sir.
strategy would be like the where.
Okay.
Okay, so strategy would be where. So obviously, certain places will offer you better, let's say, images in terms of the highest quality photos that you could take. Right, obviously operations would be, well, now I'm in that place. Okay, so if I'm
Yes,
in
sir.
that place, now I need to look for the areas where the lighting is the best, if that makes sense.
Okay. Yes, sir.
Okay, so the operations is more the like the practical, like the actual doing. Okay, the execution. All right, so obviously strategy or strategic, the strategic pillar would be looking at like the more the where, because you decide where you're going to go shoot your photographs. Okay, you decide on the location. So strategy could be more that. Okay, what is the strategy?
Yes.
Am I going to take photos in a public place? Am I going to take photos in a private place? Okay, am I going to take photos in the open? Okay, or maybe in a building? Okay, somewhere that's covered, not open in nature, in the environment, natural environment. Okay, so operations would be
Yes.
now. Okay, so now I've chosen the strategy. The strategy to take the best photos is maybe to take photographs on rooftops. Okay, that could be the strategy.
Yes, sir.
So I'm going to get the best photos if I take photographs on the rooftops of the different buildings in Johannesburg. Okay, that could be the strategy.
Yes, sir.
So I'm only going to take rooftop photographs. Okay, the
Yes, sir.
operations would be now, okay, well, if I'm taking photos on the rooftops, what am I taking photos of? Am I taking photos of people? Am I taking photos of the landscape? Am I taking photos of the skyline? Okay, that could be
Yes.
operations. So that would be more like what you're actually going to do.
Yes, sir.
Okay, then reporting is obviously going to be presenting that information. Okay, so reporting could be presenting those photographs to someone. Okay, reporting, giving that information to someone. Okay, compliance would be, well, the rules. Okay, have we complied with the rules around taking photographs? Okay, maybe did you have the rights to do so? Did you comply with any rules? So I'm not too sure. I'm not very familiar with the rules around photography. Are there any? Like, are there any compliance issues around photography?
Not so much, but I suppose the general compliance that we all encounter, just not using other people's property without their consent and their their knowledge and having paid for it. So you
Yes.
can't really shoot in specific places without having emailed them and given them whatever, I suppose, whatever price that they want, or whatever money that they might want or need
Okay.
for that place. For that, otherwise, there's not really much, unless you're doing. I think more compliance would probably be more structured in terms of films for, for like maybe closing down roads and stuff like that. But
Okay,
you know,
yeah,
if
so
you
that could be something to consider. So let me ask you this. If you're taking a photo of someone's portrait, okay, let's say someone comes to you and asks you to do some photos for them in terms of their profile, and they want you to take some
Yes.
portrait photos for whatever reason. Maybe they're a model and they want to build a portfolio, whatever the case is. Okay, so if you're
Yes,
the one
sir.
taking those photographs, do you get them to sign some sort of like agreement?
Yes, there are these things that we call waivers, and there's another word for it. But then nonetheless, it's kind of like an agreement to say that you are giving them the permission to take pictures of that they're giving you the permission to take pictures of them, and that should you use them for any commercial use, then they are, whether they're entitled or not entitled to any benefits after that. And it's just kind of it's them giving you permission, but also you closing off them wanting to come back and make any kind of profit out of your work beyond the use that they wanted it for. So
so that could be a form of compliance.
Oh, okay, yes.
Yeah, so something that you've got to do, that you have to do, in order to make these high quality photos. So that could be part of the process. That could be something more maybe legal related, but at least it's still something compliance related.
Yes, sir.
Okay. Right, so then you've got those, so these are the pillars. Then you've got the different rows, okay, or stages. Okay, obviously we start with objective, then we need to go down the process. Do you recognize any of these topics?
Yes, sir.
Okay, risk identification was part of what? The risk management process, do you agree?
Yes, sir.
Okay, so the process is actually part of the framework. Okay, here we're looking at the risk management framework. Framework means it's almost like guidelines, ways of guiding how we do things in order to achieve a certain outcome.
Yes.
Okay, so here they want us to identify the risk. They want us to assess the risk. They want us to respond. They want us to control. They want us to communicate. They want us to monitor. Okay, there's a whole lot of different, let's say, steps or stages in the actual process that gives rise to good or effective risk management. Okay, remember, you can have risk management that's very basic, that's very simple, but you can have risk management that's very complex and very advanced. Okay, but all of it is trying to achieve a specific objective. Okay, and notice here, what environment are we dealing with?
The internal.
Internal. Okay, and the reason for that is it's something that we actually have the most control over. Right, it's difficult to manage risks that are external. Right, it's difficult to manage things that you can't control. Okay, things that you can't control are easier to manage.
Yes, sir.
Do you agree? So, can you control the equipment that you use?
Yes, sir.
Yes. Can you control the weather?
No, sir.
No, you can't. Okay, so in terms of operations, okay, if I'm looking at risk management, well, if I'm taking photographs and I'm taking photographs on the rooftops of Joburg, okay,
yes,
I can't control the weather. It could be overcast, it could be raining, it could be hailing, it could be storm, there could be a storm, it could be bright and sunny. The thing is, I can't control that. Right, but I can control what equipment I use, and that will obviously help with managing risk.
Yes,
okay,
sir.
So if the weather's really bad, and let's say it is overcast, right, then I might have to bring other forms of equipment that I can control to help reduce the risk of taking bad photographs.
Yes, sir.
Okay, that's almost like having the flash on or off. Okay, obviously having the flash on, the flash that you use in terms of taking photographs would be a way to reduce the risk of not having sufficient light.
Yes, sir.
Okay. Alright, so that's the framework. What the UNISA study guide does is it breaks up into those different categories. Okay, they talk about this. Interrelated components of ERM. ERM is just enterprise risk management. Enterprise risk management is just looking at corporates, businesses, big business basically. Okay, enterprise. Okay, how does a business manage its risk? That's what you're looking at here. Okay, so the first bit is the control environment. Obviously, in the control environment, people are the ones who decide on what the objectives are. People are the ones who decide how much risk to take. People are the ones that decide on what the philosophy is, okay, around risk. Okay, last week I asked you what your view was. Okay, are you more conservative or are you more aggressive? Okay, that means are you more of a risk taker or are you one that likes to be more conservative, more careful? Okay, obviously, who's responsible for that? The board of directors. Okay, it's interrelated because, do you agree, this one component will affect another component? Does that make sense?
Yes, sir.
Okay, so how would your appetite for risk affect the objectives?
Well, I think you'd have a different set of objectives. So probably
Yes.
ones that align with your appetite for risk. So if you are someone who is a little more conservative, your objectives wouldn't be, I'd say, as aggressive and as out there, but they'd be more controlled and more ones that you're pretty much sure that you will definitely achieve,
Correct.
as opposed to someone whom is vice versa.
Yeah, so definitely, as you said, if I'm more risk, let's say seeking, okay, I'm looking for more risk, okay, I'm more aggressive, well, your actions and your objectives would obviously be different to if you were more conservative. Okay, so you can see there's an overlap, do you agree, in terms of the one affecting the other?
Yes, sir.
Okay. Right, then you've got risk identification, risk assessment. Obviously, if I'm more aggressive in terms of risk management, I'm going to want to identify as many risks as possible. Okay, if I'm trying to really have good risk management in place. Okay, versus if we weren't so focused on risk management and we wouldn't be that bothered about identifying all the risks. We would identify the main risks, but we're not going to go that much further. Okay, risk assessment, same thing. Okay, what are we going to be looking at in terms of its impact? Okay, how is this risk going to affect us? Right, if we were more aggressive, right, we're not going to worry too much about the impact. Okay, but if we're more conservative, we're going to worry a lot about the impact. Okay, we're going to be looking at, well, if I do something, what are all the consequences? Okay, so again, look at your assessment. How much detail or how much assessment are you actually going to do? Okay, it could differ depending on your objectives, depending on your risk appetite, okay, depending on your identification. Right, then you've got the risk response, the control, the information communication, and the monitoring. Right, all of those are interrelated. Okay, the one affects the other. Right, so risk response. Okay, if you decide to take out insurance, let's say that's a response. Okay, you're going insurance, which is a product, and that product is going to help us reduce risk. Right, so now we how can I put it? We need to retain the risk. Okay, so insurance could be a way to pass on the risk. Okay, so if I'm passing on the risk, I'm giving that risk to the insurance company. Do you agree?
Yes, sir.
Okay, I'm passing it on. Okay, I'm avoiding the risk, or I'm reducing the risk. Right, if I'm accepting the risk would be, well, okay, if something happens, I'm going to have to deal with it. Right, so if we're looking at photography, we could do something like insuring your equipment or not. Okay, if you insure your equipment, okay, your cameras and so on, you're passing on the risk of theft to the insurance company. Do you agree?
Yes, sir.
Okay, so yes, you pay them a premium, but you also pass on the risk of getting or losing your equipment, okay, or suffering loss in terms of your equipment going missing.
Yes, sir.
Okay. Right. Then they talk about this inherent risk, residual risk, and then they talk about a plan. Okay, inherent means something that's part of. Residual is something that's left over. Okay, so let me ask you this. Is it possible to eliminate risk completely?
No, sir. Only is it impossible?
There's always an element of risk. Do you agree?
Yes, sir.
Okay, so even if you take out insurance, the insurance policy might not cover all events.
Yes, sir.
Okay, it might cover a large majority of events. Okay, so maybe theft. Okay, but certain events might be specifically excluded from that policy. And that could give rise to residual risk. Okay, meaning the risk that remains after we've applied any of our controls or our solutions. Okay, so insurance is one way to reduce risk. But even though I have insurance, there's still residual risk. There's still leftover risk. There's still something that I need to provide for, even having provided for risk.
Yes, sir.
Okay, inherent is just part of it. Okay, it's the risk that you have before you apply any controls or before you do anything. Okay, there's always an inherent amount of risk. Inherent means it's there. Right, and it's always there. Okay, we can't actually mitigate that inherent risk. Okay, we can try to put safeguards in place to prevent it from occurring, but it's inherent. It's something that's there. It's something that we're going to have to deal with whether we like it or not.
Yes, sir.
Right, then they talk about the role players. You mentioned it earlier. Okay, are all of the business, let me not say business, are all of the role players in the business responsible for managing risk?
Yes, sir.
Yes, they are. Right, so here they've given you a big list. They've talked about the board of directors, they've talked about the audit committee, risk management group, internal audit function. Right, so I just want to relate this to something that we've looked at before. Okay, we've looked at NASPers, we've discussed them before. I just want to go to one of these pages here. Page 90, governance for a sustainable business. Right, they talk about this, the governance structure. Shareholders, okay, then you've got the board. Right, on the board, what do you see here? Well, risk committee, audit
Yes,
committee. Okay,
Domination.
why do we have those two committees? It's to formalize risk management.
Yes, sir.
Okay, if we didn't have that, okay, would there be more or less risk?
There'll be more.
There'd be more risk, exactly. Right, so here in a large organization like this one, okay, NASPers is huge, okay, biggest South African company on the JSE. Okay, risk committee, audit committee. Right, obviously we need an audit committee that's going to actually audit and assure us that all the departments within the organization are acting ethically, okay, in line with the rules. Right, risk committee, well, they're going to be identifying specific risks that could arise in different areas that the company needs to be aware of. Okay, and obviously
Yes,
the bigger
sir.
the company, the more risk that they're going for, or how can I say it? Not provide for, but try control or try manage. Okay, they spoke about the different roles, so individual areas. So if I look at the one here, board of directors. Right, the board is ultimately responsible for effective risk management, and they decide on the risk appetite. Okay, because we know, what does the board do? They act on behalf of who?
On behalf of the shareholders.
Exactly, the shareholders. Right, so shareholders actually elect, okay, or have board of directors, okay, people on the board as their representatives. Okay, those representatives are going to be making decisions on behalf of the shareholders, and that's going to affect the company. Right, so obviously you've got two levels here. You've got the internal and you've got the external. Shareholders, majority of them are going to be external. Right, you can
Yes.
have shareholders that are also board of directors, or that have equity in the business, or who are also employees. Okay, but I'm just talking generally, okay, in terms of shareholders. Okay, generally they're external, and then board, generally they're internal. Okay,
Yes,
so if I'm
sir.
looking at that, you've got two different areas here. We've spoken about the conflict of interest that could arise between parties. Right, the one wants more profit, the one wants more benefits. Right, it's
Yes, sir.
difficult to balance the two, okay, but we need to try. Right, and that's why we have rules in place. That's why we've got governance. That's why we've got a committee, okay, that manages risk, that manages audits. Okay, coming back to the textbook, they talk about other groups as well. Right, they talk about management. They talk about the different departments. Then they also talk about the audit committee. Okay, what are they required? And then they ask you a few questions here. So I'm going to practice activity just to highlight some of the points that they discuss in those few bullets there. Use your knowledge of the 8 components and rank the following in chronological order / order of dependence. Okay, dependence means what? What they rely
Dependence.
on, do you agree?
Yes, reliance.
Okay, so in terms of the thing that's the most important, out of 1, 2, or 3, A, B, and C, what's the most important?
The board. Wait, the ABC, like here, the ones that are right under here. So.
Yeah, what's the most important?
Oh, approves. risk management program could be components. The organization's vision of Americans. B, sir?
Yeah, why?
Oh no. Because without us establishing the vision and the mission and our strategies and where we want to go, I don't think we're able to figure out how to get there, or figure out the way to get there and the risk that we might encounter on the way. So we need to understand what are we trying to do, where are we trying to go, before we are able to figure out what it is that we might need to safeguard or put in place for us to get there safely. Or well,
correct. Yeah. So it's a theory question relating back to what we saw earlier. Okay, remember in the framework we saw the first step or the first stage, okay, the different pillars was obviously the objective. Okay, having an objective, defining the objective. Right, so here we would start with the same thing. The goal is going to affect the strategy as well as the program that we're going to implement.
Yes, sir.
Okay, approaches. What does an approach refer to?
An approach, I think it could also be how you're going to do something, like your approach towards something.
Correct. Okay, so risk management, in terms of the approach, is focusing on the how do we actually implement this concept of managing risk. Right, so since we've had the economic, the recession, okay, the Great Recession, okay, back in 2008, okay, when we had Lehman Brothers going bankrupt and the problems in America, and obviously we had a global event, okay, and all countries around the world were affected. Risk management has become a very, 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 very important area because companies now want to try reduce risk as much as possible because they don't want bad things happening, or they want to try reduce the amount of bad things happening or the effect of the bad things happening, if that makes sense.
Yes, sir.
Okay, so there are different models of doing this. There's the COSO, okay, Committee of Sponsoring Organizations of the Treadway Commission. Okay, this was established as a way to reduce risk. This was back in 2004. Okay, risk management is actually a very, very new area. Okay, it's newer. Okay, when I say new, inverted commas, it's been around for a few years, but you can see 2004, that's like 13 years ago.
Yes, sir.
Okay, the Companies Act is obviously a lot older than that. Okay, but it obviously gets updated and revised and changed from time to time. Okay, or like, let's say like the Labor Act, okay, or other forms of legislation. Okay, other forms of legislation tend to be older, okay, because they would have been created long ago. Right, this whole concept of managing risk is quite new, inverted commas, okay, because more risks have arose in the last few years, and those risks have had quite bad consequences on businesses and on countries as a whole. And that's why it's become more of a focal point. Managing risks, keeping your risks in check, knowing what could happen, that type of thing. Right, and that's why you have all these different committees that try to create a model. Okay, a model is almost like a recipe, if you will. Okay, a model is almost like it's like a book telling you how you should do things, if that makes sense.
Yes, sir.
Okay, and that's what these different committees do. They obviously meet and they discuss, and then they decide, well, okay, this is what we need to do in order to keep risk in check, in order to manage risk as best as possible. Right, and that's why you've got these different objectives here that relate to what we saw earlier. Okay, strategic operations reporting compliance. This was all part of that framework that we saw earlier. Remember that?
Yes, sir.
Okay, so you don't really have to worry about this because you can just refer back to that diagram that we saw earlier. Okay, this one here. Okay, that's everything. Right, all the different components relating to risk management are outlined on this diagram. Okay, obviously different levels refer to different things, and different pillars refer to different, let's say, core concepts that need to be provided for.
Yes.
Right, so we've looked at that one. Here's another one. IRM. Okay, Institute of Risk Management. Okay, so earlier we saw this one. The Committee of Sponsoring Organizations. Okay, obviously that's a group. It's a committee. Okay, group of businesses, group of institutions. Here, you've got a specific institution's view. Okay, so this is like your SICA, similar to SICA.
Yes.
Or your SEMA. Okay, it's a body. It's a regulatory body. That makes sense.
Yes, sir.
Okay, so regulatory bodies are responsible for managing specific areas. Okay, so you get different regulatory bodies. You get a body that manages accountants. You get a body that manages the doctors. You get a body that manages the lawyers. Okay, it's just a way to regulate a specific area or to try, how can I say, formalize a specific area. So is risk management a big thing? Is it something important?
Yes. Yes, sir.
Yes. Okay, so what they've done is they've created this institute. Okay, and this institute is responsible for that, risk management. Okay, so different institutes are responsible for different things. This one is responsible for risk. Okay, assessing the risk, reporting, evaluating, making a decision. Okay, and then obviously rectifying or implementing certain tasks or objectives, not objectives, safeguards. Okay, treatment. Okay, what are we going to do? What's the treatment? Okay, we know what the symptoms are, how we're going to treat the problem. Okay, reporting and then monitoring.
Yes, sir.
Obviously, we need to monitor. And then notice how they've got arrows here. Why do they put arrows? It's because it's a cycle.
Yes, sir.
Okay, is it possible to achieve risk management?
No, sir. It's continuous. It's continuous.
Why isn't it possible to achieve?
Because
is it a destination? Do we go somewhere and eventually we get good risk management?
No, sir.
No. Why not? Explain.
Well, sorry, so can I just... because risk management, risks arise all the time and risks occur all the time. So you can never say that at a particular point you've covered all the risks. There's always new kinds of risks that are arising. Your job as a risk management department, I suppose, it's to limit the risk, so to reduce it, not for it to be widespread and get out of control to such a point where it's the one dictating what you want to do for your organization. So I believe that it's a cycle. So you manage these kind of risks and you reduce them. And at the specific point or at another point, new risks come up, and you try to reduce those. There's no such a thing as there's no risk at all in what you're trying to do. And because management is always trying to come up with new ways and new strategies, there's always going to be a new risk attached to that.
Good. Yeah, that's perfect. Okay, so it's a cycle. As you said, it's no destination. You don't arrive at good risk management. Okay, you implement and you apply good risk management, and it needs to be done all the time. Do you agree?
Yes, sir.
Okay, because the moment we stop the cycle, okay, the moment we stop analyzing risks, assessing risks, identifying risks, evaluating risks, the moment we stop doing this process, then we actually don't achieve risk management. Do you agree?
Yes, sir.
Yes, the risk management is the actual process. It's the actual doing. It's the actual checking. It's the assessing. It's the evaluating. It's the reporting. It's all of this. All these steps actually contribute to this idea or concept of risk management.
Yes, sir.
Okay, risk management isn't something that you just say, well, okay, let's buy an insurance policy. So if something bad happens, okay, we're covered. Okay, that isn't risk management. Okay, buying an insurance policy would be this. Risk treatment, that would be buying a policy. Taking out insurance. Okay, taking out insurance might not reduce the risk. Do you agree? Okay, so here's the question. If you take out car accident cover, okay, car insurance. Okay, so if you're in a car accident, you're covered. is that going to reduce the risk of being in an accident?
You haven't been... No, it's not going to.
It's not going to. Okay, do you agree? If I take out insurance, okay, for damages to a vehicle in the event I'm in an accident, do you agree that doesn't reduce the risk of being in an accident? Do you agree?
Yes, sir.
Okay, you're either going to be in an accident or you're not. That risk is not going to change.
Yes, sir.
Okay, but the way you react to it or the way that you deal with it is going to be different. Do you see that?
Yes. Yes, sir.
Okay, so that's what you're looking at here in terms of risk management. That's the IRM, okay, Institute of Risk Management. Then you've got CIMA's approach. Okay, CIMA, we're looking at management accountants. Okay, Chartered Institute of Management Accountants. Okay, that's what CIMA is. Okay, management accounting is looking at internal accounting. It's looking at the detail. It's looking at all the different areas. Right, notice this is their approach in terms of risk management. Okay, so CIMA follows this model. Okay, a model is the how. They're providing you with this guideline. Okay, this how can I say, this infrastructure or this idea. Okay, these concepts. They're creating these how-tos in order for you as a business to achieve good risk management. Okay, so what do? Very similar to what we saw before. It always looks at establishing risk management goals, okay, objectives. Right, it's just laid out in a slightly different way. Okay, here they're looking more at a cycle, right, where you've got identify risks. Once you identify risks, you need to understand them, you need to assess them. Okay, once you've assessed the risk, then you need to develop a response. Okay, so what do we do? Okay, do we take out insurance? Don't we take out insurance? Okay, and obviously all of this information is gathered and used as a way to keep this in check. Okay, because risk management is all about information. Do you agree?
Yes, sir.
Okay, the more information we have, the more easy it is to identify risk. Does that make sense?
Yes, sir.
Okay, without information, is it possible to identify risk?
No, sir.
No. And that's why all of these areas form part of this one process, gathering information in order to make better decisions. Right, then you've got an Australia-New Zealand standard. Okay, this is very specific to that specific area, okay, where they looked at different ISOs. Right, so let's just highlight that. International Organization for Standardization. Okay, standardization means everything that's similar, okay, based on principles. Does that make sense?
Yes, sir.
Okay, so this considers the Australia/New Zealand standard for adoption as an ISO standard. ISO standard meaning what we should be doing. Okay, again, it's a model.
Yes, sir.
Okay, so we can even relate this to photography. Right, you know that there are certain ways of doing certain things that will generate certain results. Do you agree?
Yes, sir.
Okay, and what is that? That's just a model. It's a way to do certain things. Okay, so you know, if I do X, Y, and Z, I'm going to get a good photograph. If I don't do X, Y, and Z, and if I do something different, I might get a slightly different response. Okay, whether you follow photographer 1's advice, or whether you follow photographer 2's advice, or photographer 3's advice, do you agree you're still going to get a photo at the end of the day?
Yes, sir.
Okay, it just depends on the how. Did you do it according to this model? Did you do it according to that model? Okay, it's just different ways of doing the same thing. What are we trying to achieve? Good risk management. Make sense?
Yes, sir.
Great. Okay, and that's that chapter. Okay, very theoretical, lots of theory around components and the role players. Who is actually responsible for managing risk? Right, now we need to expand on the actual nitty-gritty. Okay, now we're going to be looking at the detail. Okay, so we need to dive a little bit deeper. Okay, right now we know what risk is, we know what the process is, we know there's different models to provide for risk. Do you agree?
Yes, sir.
Okay, so topic 10 is expanding on all of those different areas. So the first area is looking at the identification. That's step number one when looking at good risk management. Do you agree?
Yes, sir.
Okay, you can't manage a risk if you don't know what it is. Does that make sense?
Yes, sir.
Okay, so that was the one process. Whether we're using the SEMA approach, so whether we're using the ISOs, okay, even look at the ISOs. What's the first step? The goals and identifying the risks.
Yes, sir.
You see that? Okay, so we can't identify risks if we don't know what the goal is. Okay, so the goals and the identification go together. Okay, once we've identified the risk, then we need to analyze the risks. Is this going to affect me, yes or no? Same thing with this one. Where is it? Here. Step number one, identify. Same thing here. Step number one, okay, well here they use assessment. Okay, assessment could be part of the identification process. Okay, risk analysis, there, risk identification, it's there. See that?
Yes, sir.
Okay, so let's look at the first bit, which is identifying risk, knowing what risks are. Okay, and there's a lot here. It's all theoretical. They talk about different areas. Right, I like the summary here because they talk about principal risk objectives and they talk about types of risk. Okay, why do they group those two things separately?
I think the principal risk objectives or whatever. I think if I think those are the bigger main core ones, the ones that you'll probably feel, I suppose, more internally or within your business. And I think maybe the main types of risks are the ones that perhaps maybe might not really be in your control, but you will feel nonetheless within your business.
Okay, yeah, you're right. Okay, so it's looking at like categories. Okay, the word category is there. Okay, so the way I like to look at it is like let's say you go to the store. Okay, did you buy anything today?
No, not at all, sir. No.
Okay, today you didn't do any shopping. Okay, so did you do any shopping last week?
Not really, but I think I did buy. I think I bought like chips, like diddle daddles or something.
Okay, there you go. You bought some crisps, chips, and diddle daddle popcorn and stuff. Okay, so you bought snacks.
Yes, sir.
Okay, so what are you going to group snacks under? Snacks would be under food.
Yes, sir.
Okay, food would be the category. Okay, you bought a food item. Do you agree there's a lot of different types of food?
Yes,
okay,
sir.
There's snacks, and then even under snacks we could have chips, and we could have popcorn, and we could have cold drink, and all of that. Do you agree?
Yes, sir.
Okay, so I like this classification. It's because they look at these categories, and these categories are important because we saw this in the framework. Okay, so must a company manage its operational risks?
Yes, sir.
Yes, they must. Okay, but remember, operations look at the actual practical things. So then operations, something that could fall under operations could be HR. Do you agree?
Yes, sir.
Okay, are there risks in HR?
Yes,
Yes, there are. Right, but that's an operational risk. Do you agree? Something else could be IT.
Yes.
Okay, is IT part of operations?
Yes, sir.
Yes, again, that would be an operational risk. But see, it's like a flavor. Okay, so you have the main category and then you have a flavor. Okay, or you have a subcategory. Yes. Right, business risk, economic risk, financial risk, market risk, social risk, political risk. There's such a lot. Okay, all of these are like different items or products on the shelf.
Yes, sir.
Okay, it's like buying food. Okay, there's a lot of different types of food that you can buy. Some food items focus on certain things. So, for example, do I buy dairy? Okay, or do I buy fruit? Or do I buy vegetables? Or do I buy meat? Okay, so these could be different categories. Okay, dairy is one category, fruit is one category, vegetables is another category, meat is another category. Okay, but all of them form part of what? The business. Okay, what we need to operate. Do you agree?
Yes, sir.
Okay, we're just breaking it up into different types. Okay, so principal risk objectives, we've spoken about this already. Okay, this is repeat previous chapter, chapter 23. In that chapter, we saw that diagram. Okay, that summary. Okay, I like that summary. Just study the summary where they talk about the different levels and they talk about the different pillars. Okay, that square summary. Okay, strategic, operational, reporting, compliance. Those are the pillars of risk management as described by the committee. Okay, then you've got different types of risk. So let's talk about the first, strategic risk. Okay, remember it's strategic, meaning it relates to that pillar. Do you agree?
Yes, sir.
Okay, so a strategic risk is described as one that has more to do with the organization's position and relation to the external environment in the long term. Okay, because of strategy. Strategy is looking in the future, not now, okay, in the future. Okay, if I looked at things now, then I'm looking at operations. Does that make sense?
Yes, sir.
Okay, so let me ask you about this. I'm going to apply all of this to your industry. Okay, so let's talk about being a photographer.
Yes, sir.
I want you to give me a strategic risk.
Well, we did say earlier on that strategy would be the way. So I think a risk of perhaps that kind of strategy would be, for example, if a client wants to do a shoot on a rooftop, or a specific kind of rooftop, and so on and so forth, I think the kind of risk that I might encounter would be, I want to say the risk of failure, in the sense that the client might not agree. The risk in the sense that I might have to look for another place, or even on that specific day, that place that I want to shoot at is not as well lit, or the light isn't as perfect as it usually is on other days that I had been there. So I think that would be a risk of the kind of strategy.
Okay, so yeah,
strategy that
I would take it higher than that. Okay, so let me ask you this.
Yes, sir.
What type of photographer are you?
I'm a portrait photographer, sir.
Okay, see, that's strategic risk. Okay, because now, is that
Yes.
going to affect you long term?
Yes, sir.
Because that's what you've looked at in terms of your positioning. Does that make sense?
Yes, sir.
Okay, so if you're a portrait photographer, you're only taking pictures of people. Is that right?
Yes, sir.
Okay, so is that going to affect your long-term strategy?
Yes, yes, sir.
It could.
Yes,
Okay, it could either help or harm your ability to take photos in the future, right?
yes, sir.
Okay, so you're trying to carve out a niche for yourself. Okay, so obviously, if you're focusing on portraits, that's what you're focusing on, right? And then
Yes,
other
sir.
photographers would focus on other things, right?
Yes, sir.
See, that's their strategy. So am I taking photos of items? Okay, consumer goods. Am I taking photos of sporting events? Okay, live events. Am I taking photos of landscapes? Do you see where I'm going with that?
Yes, sir.
See,
I
that's
see.
strategy. So for me, strategy would be more what type of photographer are you?
Yes, sir.
Versus, am I going to be taking the photograph on the rooftop or not? Okay, because even if I am taking photographs on the rooftop, I could be taking photos of people on the rooftop, or I could be taking photos of the landscape on the rooftop.
Yes, sir.
See, the strategy is, well, what type of photographer are you?
Yes,
Okay,
yes.
so that's where I would go with that point. Okay, let's talk about operational.
Yes, sir.
What operational
Oh,
risks are there for a photographer?
Well, I think the biggest would be I think this falls under operational. Your camera failing on you. In some case, that has happened before, where you have your equipment and everything is ready, and once you are about to begin, suddenly there's a malfunction in your equipment. Or in some cases, if you're doing billboards, I think a risk would be not getting the right kind of camera that has the correct amount of megapixels that will be sufficient enough for large prints. So I think that would be possible operational risk.
Good. Okay, so do you see how operational is very day to day? Okay, you told me about your equipment, right?
Yes, sir.
Okay, you spoke about your camera equipment failing, and that's obviously going to affect the quality of the photographs, or even the ability to take photographs. Okay,
yes,
would
sir.
lighting be an operational risk?
I think so. So if you have what are these things? These external lighting, strobes and flashes and stuff like that.
Okay, so do you agree those things help you to reduce the operational risk of not having good light?
Yes, sir.
Okay, what about the people or the objects that you're taking photographs of? Is that a risk?
Yes, sir. They might not even show up, or they
maybe the person doesn't show up, or maybe there's a problem with the product.
Yes, sir.
Okay, good. Right, next, reporting risks. Talk about reporting risk for a photographer.
Reporting risk would be, well, in every I remember, let me give you an example. The first kind of job that I suppose the first bigger kind of job that I received was by some Genevan hair company. They from Switzerland or whatever. But at that time, I was still starting out as a photographer, and I didn't have, these things like tax clearances and stuff like that. So I didn't have those kind of things, and they needed those things because if they're gonna give me compensation or money, they would need those kind of things. But the thing that made it hard, or it made it a big risk, was that I had done the work. Excuse me, I had performed the work for them already, and then when it was time for them to compensate me, they had asked for a tax number. They asked for tax clearance certificate if I'm part of a big organization, whatever. And unfortunately, I didn't have those things. So the risk in that sense was not having the financial papers or documentation.
Yeah. So what happened? Did you not get compensated for that job then? Did you just write it off, or what happened?
No, so I did. It just took very, very long because I had to wait. Well, I went to SARS and everything, but then it just took a little longer. And these our companies, they have this that whole 90-day thing. So I was very fortunate at first, was in the sense that I was part of that first payment cycle. So they had gotten to, I suppose, their 90 days or whatever, and they were going to pay all their creditors. And because I didn't have my stuff, I got shifted to the next, I suppose, 90-day payment cycle or whatever. So that was the only lag or the only drag about it.
Okay. All right. So at least you still managed to get your compensation from the international company because you had to comply with all their requirements.
Yes, sir.
Okay, so see, that was a risk. That could be a risk in terms of operations. Okay, so maybe as a business operating, you should have those, let's say, resources on hand because companies do tend to ask for those type of things.
Yes, sir.
Okay, so compliance. Tell me about the legal risk for a photographer.
Well, the legal risk for a photographer in terms of compliance is, like we said at first, you have to sign, all clients have to sign waivers to give you permission to photograph them. The only risk that might be would be, because when you sign a waiver, when you make a client sign a waiver, another client might see that person's work, the work that you did for that person, and might not request you to shoot something different. They might just request those particular images. So when they request those particular images and you give them to that company or to that person at whatever price, because the waiver already stipulates that you don't okay, let me put it like this. I think my explanation is going to be very bad. So if so I'm shooting you, Anthony, right? So I say to you, Anthony, please sign this waiver that gives me permission to take pictures of you, but also relinquishes any of your, or anything. If I make any money out of these images, so if I do an exhibition or whatever, and I sell these images, you don't get an opportunity to ask for compensation for them or for that image. So if in that case, I think the risk would be if someone comes back and if Anthony comes back and says, well, you sold my picture for 2 million, I want half of that money, and so on and so forth. I think that would be one of the legal risks. And also shooting in people's places, I've also been not in trouble, but I've had some run-ins where, especially when I first started out, because I didn't really take much mind of that, was shooting in certain public places, and usually the people don't have a problem with you shooting on the pavement or on the side of the road or whatever, but it's shooting inside the premises that they have a problem, and those could be a certain compliance risk, and you'd have to pay a certain fee that I hadn't paid, and I used to get into a bit of trouble sometimes.
Okay, yeah, so interesting. So obviously you've actually dealt with some of this compliance risk that has arisen in the future, or not in the future, in the past, but now obviously going forward you can now plan better for the future.
Yes, sir.
Okay, good, nice. Right, then they talk about types of risk, and there's a lot here. Okay, so I want to use again an example. Okay, so you can identify, is this a business risk, economic, financial, market, social, political? Remember, risk is just uncertainty, not knowing what's going to happen. Okay, these are not the only ones. You could even bring in more if you wanted to. Okay, but these are the ones that the textbook talks about in a bit more detail. Okay, so just to go through the key concepts, business risk, just to highlight this, is looking at the organization in terms of its processes, products, and structure. That's a business risk. The way I like to think about it is just business. Okay, obviously it's the business. It looks at everything. The people. Who do you employ? What do you do? What do you offer? What's the structure? Okay, then you've got economic. Again, make it simple for yourself to study. Economic risk relates to the economy. Right, so normal economy. What relates or what originates from the economy? How does the economy affect us as a business? So, will inflation, will unemployment, will other economic factors affect our business? Right, that's something to consider. Right, then you've got financial risk. Financial, the key word is financial. So this is looking at, do we have sufficient resources within the business? Or what risks will affect our resources? And C, financial can be split into different ones. Investment risk, currency risk. Do you see how you're getting like subcategories to categories?
Yes, sir.
Okay, it's like buying food. Okay, food can be broken up into meat or fruit or vegetables. Okay, if I'm looking at meat, well then it can be broken up into different types of meat. So chicken, beef, etc. Okay, and obviously under each of those, under chicken, beef, then you can get different cuts. Okay, so chicken could be, well, are we looking at the wings? Are we looking at the fillets? Are we looking at what? Beef, same thing. Okay, what type of cut of meat are we looking at? Okay, so do you see how you're expanding on this? Right, the same thing here. Financial risk is a risk, and financial risk can be broken up into different areas. Investment risk, currency risk. Same thing as up here, economic risk. We can have product risk, we can have stakeholder risk. Those are things that would be part of the economic risk. Right, so you can either go more detailed or less detailed, more high level or more lower level. Does it make sense?
Yes, sir.
Okay. Right, you've got more here. Market risk. Again, keep it simple. Think about the market. market means events or transactions in the actual marketplace. So things that happen in the market that affect the business. Right, so the JSE, okay, the country, okay, that's the market. Okay, the geography, the area. Okay, our competitors. Okay, competition. Okay, that's part of the market. Right, so competitors will affect the market risk. Commodities, okay, the things that are sold in the market will affect the risk. Social risk, keep it simple. The word social means people. Communities. Okay, do you agree? If certain communities are unhappy, there's a higher social risk.
Yes, sir.
Okay, because communities are groups of individuals. And if groups of individuals are unhappy, then the impact on the organization will either be very high or very low, or very good or very bad. Okay, we've got political risk. Refers to the political activities or instability within a country. Information risk. Information relates to data. Okay, news, information. Right, so this is looking at the decision making. Do we have quality information or do we have poor quality information? Okay, high quality or low quality of information. That's going to affect our decision making. Here's another one, technological risk. Again, keyword here is technology. Right, so this is a nice one because it relates to photography quite a lot. We spoke about digital and analog last week.
Yes, sir.
Okay, that could be a technological risk. Right, another risk could be now, well, we've got 4K, okay, we've got UHD versus HD.
Yes, sir.
Okay, there's a technological risk. Right, photographers might now need to photograph things in 4K versus normal high definition.
Yes, sir.
Okay, technology. Environmental risk. This is looking at the climate. Okay, the environment, the area. This is looking at pollution. Okay, what impact do I have on the environment? Will I affect the environment positively or negatively? We've got compliance risk. We saw that earlier. Reputational risk. Reputation is looking at people's opinion. Okay, bad publicity could be a risk. Good publicity could also be a risk. Okay, because now we need to manage both. We need to manage the bad publicity and also manage the good publicity. Right, and that covers all of those different risks. Okay, so before we look at more of the chapters, I want to apply this to a scenario. So let's talk about this. Okay, articles. So in Fin24, this is the website, and they've given you a few articles here. These are obviously articles that relate to what's happening currently in the world. Okay, I thought this one was quite interesting. No Eskom tariff hike without action on climate change. Okay, this is what NERSA. Okay, obviously NERSA is the National Energy Regulator of South Africa. Right, so Eskom is wanting to implement another tariff hike. Okay, meaning they want to increase the price of electricity in this company for like the 20th time. Okay, I'm just being sarcastic. But they've always increased the electricity prices. Okay, and they've always done it. The prices of electricity have been going up and up and up and up and up. And obviously there are certain other things that the government is trying to deal with from a fraud and corruption point of view around Eskom as well, as being as not always being acting ethically, okay, or in the country's best interests. Right, and that's something that we need to look at in terms of risk. So I'm going to open this article, okay, and I'm just wanting you to think about what are they currently focusing on here. So the article is looking at this: a tariff hike without action on climate change. Okay, so is the world becoming more green?
Yes,
yes,
well,
it is.
Yes,
Okay,
yes, that's what we're trying to achieve.
Yeah, so do you agree companies no longer are allowed to pollute without consequences? Does that make sense?
Yes, sir.
Okay, so in the past, you could produce energy and you never had to worry about the pollution that it made.
Yes,
Okay,
sir.
and we know in South Africa we have lots of coal-fired power stations we don't rely too much on other forms of electricity creation. Okay, so yes, we've got Coburg as a nuclear power station. We do rely a little bit on solar and water and hydro, but we're still not there in terms of being a sustainable energy producer. Does that make sense?
Yes. Yes.
Okay, so now the big question here is, if Eskom is going to be asking for a tariff hike, that means we're going to be spending more money on electricity. Okay, are they still going to be producing electricity using the conventional ways of producing electricity? So are we still going to burn oil, gas, coal? Okay, or are we going to expand and look at other areas? Okay, maybe we should look at solar. Okay, we should maybe look at wind and water. Okay, those are the cleanest ways of producing electricity, and it's the most sustainable, right? Because the sun, water, wind, okay, those are natural elements that exist in nature that can actually produce electricity, versus consuming energy. Okay, so coal-fired power stations consume energy. Same thing as nuclear, they consume energy. Okay, there are cleaner ways of producing energy, right? And that's pretty much what they're looking at here. So I just want you to think about risks in terms of what we spoke about here. I'm going to go back to the main heading right at the beginning. This one.
Yes, sir.
Okay, and I want you to think about certain risks that would affect either the government, either Eskom. It could be anything. Okay, maybe even the people. Okay, the different role players. Remember, lots of different role players are going to be affected by this particular decision. Okay, are they or aren't they going to increase the price of electricity in this country? Okay, they said here that no Eskom tariff hike without action on climate change. Right, so that's something that is being spoken about more so, and this is being mentioned by the regulator. Okay, the National Energy Regulator of South Africa is wanting Eskom to be more conscious of how they produce electricity.
Yes, sir.
Okay, so yes, we're going to be paying more for electricity potentially. So now, what are we going to do as a country? Are we going to create more sustainable ways of producing electricity, or are we still going to rely on our old methods of burning oil, gas, and coal in order to keep the lights on?
Yes, sir.
Okay, so what risks can you think about or identify here? So just give me one or two or three, depending on how many you can identify.
Well, obviously, first of all, the environmental risk behind it all. I would also look at potential social risk. I mean, if you are looking at increasing the tariff while you as a company are impacting the community negatively in terms of pollution and so on and so forth, then I don't think people, the consumers or the people that live in that community would be the happiest.
Good.
I also think that it might also have I want to say compliance risk as well, because I mean, if the regulator is telling you that hey, you want to increase tariffs for people, but are you mindful of the fact that you also have to succumb to the regulations that we've put before you in terms of the amount of carbon emissions that you are putting out into the environment? So I think with that last one, it would, in the sense of the regulator, it wouldn't make sense for Eskom to, like you said, to always be increasing tariffs and increasing, the prices when they themselves are not even looking at other forms of, or greener forms of producing electricity, which will at the end of the day have a better impact on the environment, which will have a better impact on the community as well.
Okay, good. Yeah, so I mean, even look at this. In the article, this paragraph here at the bottom says, he explained that South Africa has the 13th largest carbon emissions in the world. Okay, so there are hundreds of countries in the world, and we are number 13 in terms of being the largest carbon emissions polluter.
Yes, sir.
Okay, and that's why Eskom has the greatest responsibility to decarbonize. Okay, decarbonize obviously meaning to go more green. Okay, to produce less pollution.
Yes,
okay,
sir.
that's quite scary to think that as a country, okay, we're so high on the list of the largest carbon emissions producers in the world.
Can I ask, are we an industrial company? Why are we so high up? Like, I don't know.
It could be a whole host of different reasons. Okay, obviously we're still an emerging economy. Okay, South Africa is still considered part of the emerging markets. Okay, and
Yes.
as an emerging market, they generally produce a lot of pollution because they're looking at production and manufacturing and so on. Okay, it's like
Yes, sir.
China is one of the biggest polluters, probably the biggest. I'm not too sure where they rank on the list. Okay, but they are responsible for a large amount of pollution. Why? Because they produce so much goods that are exported in other places of the world. Okay, so they might even be the first, the largest. I'm not too sure. Let's just check that. Largest. What country is the largest carbon emitter of... Okay, let's use that one. There's the one Google search.
Oh,
okay, yeah, number one. Yeah, okay, I was right. Okay, I thought they were, but I wasn't sure. Okay, so this is based... Okay, so obviously this is a bit outdated. Okay, these are 2011 total emissions by country rank. Okay, so you can see in terms of global emissions of CO2 gases in the world, China's the worst. Okay, they're number one. Okay, then you've got the US, number two. Then you've got Russia, and then you've got India. Okay, these are all countries that have a lot of production, okay, a lot of manufacturing capability. And that's why they produce so much waste and so much pollution. Okay, because they consume a lot of energy because they're creating lots of products and services.
Yes, sir.
Okay, so this is from 2011. So number one, China, then US, then Russia, then India. Okay, in terms of the list of how much carbon they emit in the world. Right, here's each country's share of the 2011 total carbon emissions. Okay, so on this diagram, see, there's Africa. Okay, we're one of the biggest. Okay, so on this pie chart, obviously 1% would have been quite a large, substantial portion. So, and then the rest of the world. See, rest of the world forms up the other 20%. Those are like all the other hundreds of countries that make up the rest of the world. Do you see that?
Yes, sir.
Okay, so the biggest polluter, China, then US, then Russia, then India, then Japan, then Germany, South Korea, Iran, Canada, Saudi Arabia, Brazil, UK, Mexico, South America, Indonesia, Italy, Australia, France, Spain, Poland. Okay, those are all countries that actually make up a big portion of the world's pollution, okay, in terms of CO2 emissions. Right, so that's definitely a risk. Okay, I mean, some of these countries are so small. Like, I mean, Spain is small compared to South Africa. Even Indonesia, that's tiny. Or Mexico. Mexico is a lot smaller than South Africa. And these are like smaller countries. Okay, some countries are bigger, some countries are smaller, but you can see which countries are the ones that produce the most pollution.
Yes.
Okay, which is quite interesting. Right. Okay, so that's the first bit. We've covered another study unit chapter there. We've completed that one. Let's just check. Yeah, that's the end of that one. Okay, then we've got 3 short chapters to look at, which I'm going to look at after the break. So let's pause there for a bit.